Hello, my name is Rudi Fronk, and I am Chairman and CEO of Seabridge Gold, a company that I helped form 24 plus years ago. Just a reminder that I will be making forward-looking statements during this presentation. When we started the company back in October of 1999, one of our guiding principles was to try and minimize political risk by focusing on safe areas. And as you can see on this map, all of our projects are located either in Canada or the United States. We have two advanced stage projects, KSM in British Columbia and Courageous Lake in the Northwest Territories. And we have three earlier stage projects, Iskut, Three Aces, and Snowstorm. One of the most important guiding principles we followed from day one was to try and build the industry's best leveraged play to a rising gold price. When we formed the company in 1999, the gold price was about $260 an ounce, and we believed it would go substantially higher, which obviously it has. Our goal was to simply try to grow ounces in the ground faster than shares outstanding, with the thought being that with the more ounces we can provide on a per share basis, the better our share price should do as the gold price goes higher. And as you can see on this graph here, we've delivered on that concept. In fact, if you look at the end of 2022, comparing Seabridge to other peer group companies, nobody comes close to us in terms of gold reserves per common share or gold resources per common share. At 2 ounces of gold per common share in the ground, we have 5 to 50 times more gold ownership than the leading gold mining companies on a per share basis. And what this has translated into is what we were hoping for, that our share price would significantly outperform not only other gold companies, but the price of gold in a meaningful way. And as you can see on this chart here, we've delivered on that concept. Over the past 24 years, the gold price is up about 500-something%. Our share price is up over 5,000%. The takeaway from this is if you're looking for exposure to higher gold prices, or you're like me and believe that the price of gold will be going substantially higher over the next few years, Seabridge has a 24-year track record of significantly outperform gold and other gold equities. If the price of gold is going higher, so should our share price. We're also at a point in time right now where gold equity valuations are as cheap as they've ever been relative to the gold price in my career. If you look at the historic relationship here between GDXJ, which is an ETF of junior gold mining companies, of which Seabridge is part of, compared to the price of gold as a proxy using GLD, you can see here that gold mining stocks are significantly undervalued compared to the gold price. Just to get back to the mean, at gold now over $2,000 an ounce, gold equity values would almost have to double just to get back to where it's been on a historic basis. You can see the same thing also, the GDX. It's not just the junior companies, it's also the largest gold mining companies on the planet that are undervalued relative to gold on a historic basis. We talk a lot about gold at Seabridge, but in fact, we also found a lot of copper. If you ignore our gold, our silver, and our molybdenum, and just focus on the copper reserves we have and copper resources we have, on a copper per share basis, we actually provide more copper ownership than the leading copper companies. And why is this important? Well, in the world now turning towards green energy initiatives, the use of copper is going to become far more important. As such, not only will our share price go up with the gold price, but it also should move up with higher copper prices. The most important asset in the portfolio today is KSM, a project that we acquired in the year 2000 from Placer Dome. Placer Dome had spent over $25 million at KSM, defining two small deposits, Kerr and sulfurettes. We bought this project in June of 2000 when the gold price was about $260 an ounce and the copper price was about 60 cents a pound. And we bought this project for about $200,000. If you fast forward to today, KSM is now not only the world's largest undeveloped gold copper project as measured by reserves and resources, but also a project that shows tremendous capital efficiency, a project that has permits in hand, and a project that has the support of the local indigenous people that surround the project. The project is located in an area called the Golden Triangle that is now fast becoming the go-to region for the largest mining companies in the world looking for gold and copper. Close by to us, we have Newmont, we have Teck, we have Newcrest, which is now part of Newmont, we have BHP, and we have Freeport. When we bought this project in June of 2000, infrastructure really was non-existent. Today, though, with other people's money, infrastructure is now plentiful. We have a major highway just to the east of KSM, Highway 37. Along this highway, the government of Canada has spent over $700 million extending the power grid, bringing cheap hydropower to the district. We've now secured with BC Hydro 245 megawatts of power from this line, and we're now building a switching station that will allow us to take power off the line and into the project. This will be some of the cheapest power in the world. The current tariff for taking power off this line is about 5 cents US per kilowatt hour. And then last but not least, just to the south of us, we have 2 port facilities that will allow us to choose a port to either take concentrate out or supplies in on a year-round basis. Access to highways, access to cheap power, and access to ports does separate KSM from a lot of these other large undeveloped gold-copper projects around the world. We talk about KSM being a project. In fact, what we own is a district. We now have 5 deposits at KSM. Kerr and sulfurites were known when we bought this project from Placer Dome in the year 2000. We've expanded both deposits through exploration. We found Mitchell in 2006. We found Iron Cap in 2010. And we purchased the East Mitchell deposit from our next door neighbor Pretium in 2020. If you rack up all the resources that exist at KSM between the 5 deposits, we now have over 11 billion tons of economic resources that host over 150 million ounces of gold and over 50 billion pounds of copper. As we went through the environmental assessment process, however, right now we're permitted for 2.3 billion tons of tailings. So even though we have 11 billion tons of economic resources, the focus has been what mine plan should we bring forward that provides the best economic returns for the first 2.3 billion tons of tailings that are permitted. After we purchased the East Mitchell deposit from our next door neighbor in 2020, we embarked on a new mine plan, focusing on open pits only at Mitchell, East Mitchell, and sulfurites, and came up with an updated preliminary feasibility study that captured 47 million ounces of gold and just over 7 billion pounds of copper and 160 million ounces of silver in proven and probable reserves. If you look at the economics associated with this project, we can now show a 33-year mine life on the first 2.3 billion tons of ore that produces over 1 million ounces of gold a year and 178 million pounds of copper a year. In fact, in the first 7 years of mine life, which is important in terms of recouping initial capital, this project will produce over 1.4 million ounces of gold a year and about 250 million pounds of copper a year. The all-in cost of production at KSM, including the upfront capital, the sustaining capital, the closure costs, the reclamation costs, and the operating costs net of copper and silver byproduct credits, is about $600 an ounce. The industry today is touting an all-in sustaining cost of production for gold at above $1,200 an ounce. This is a project that will be able to produce gold at half of what the industry is producing gold for today. Obviously, looking at what's happening with other large projects around the world, there is impact of inflation on projects' upfront capital. KSM, because of the robustness, the low operating costs, and the longevity, can withstand higher costs. In fact, if you look at the sensitivities at KSM relative to higher copper operating costs or capital costs, the project still generates double-digit returns with increasing capital should that come about. What about the other material not included in the pre-feasibility study? Well, we have another 8 billion tons still available there. So in the updated technical report, we also included a preliminary economic assessment that added another 39 years of mine life on top of the original 33, but turning more copper out of production. This focused on block caves at both Kerr and Iron Cap. KSM is unique. It's in a safe jurisdiction. It has tremendous economics. It has the support of the local indigenous people. And if you play it out, it could have a mine life in excess of 200 years. Not many projects around the world that can do that. One of the differentiations that we have at KSM is that we have our permits in hand, having achieved environmental assessment status in 2014. Those permits were set to expire in 2024. As a result of COVID, we got an extension to 2026. There is a provision in British Columbia known as substantially started that if we can get this designation, the permits are then good for the life of the project. To remove this risk from the project in 2021, we decided as a company we would go out and fund and do the work necessary to get substantially started status. To fund this work, we were able to secure $375 million US in funding from Sprott and Ontario Teachers' Pension Plan by using the project as the funding mechanism. These secured notes will convert into royalties at the project at commercial production. I'll now walk you through a few pictures here of work we're doing. Here's a picture of the camp we built now, Camp 11, which brings 210 beds to the project. Associated with the camp, we have sediment control measures put in place in terms of clarifying ponds, and also, if required, water treatment facility here, making sure that if water is discharged to the environment, it's at a very clean level. As I mentioned, power is a big part of this project. We've now contracted with BC Hydro for $92 million, where they are in fact building our switching station for us. The platform is now done, and they've now started construction of the building, and will bring in the equipment that will allow us to take power off the line and up to the project. When we bought this project, there was no road access. We are now building roads at KSM. We've now completed about 20 kilometers of the Treaty Creek access road that comes right off of Highway 37. And we've also started the access road at Coulter Creek. And we'll continue to pioneer these roads beyond what's completed today to ensure that when the partner steps in on this project, that we'll have a access secured at the project site. A big part of environmental assessment is looking at fish habitat. If your project will interfere with existing fish habitat, you need to build new fish habitat. Because of the proliferation of fish in the area, we have 4 fish habitat sites that will have to be built, and we've now completed construction of the first fish habitat site, which is now completed right off of Highway 37. And finally, bridges. We have 2 major river crossings. We've now completed the bridge across the first river, the Bill Irving River, that will allow access from Highway 37 across the bridge and up to where the tailings in the mill will be located. As a result of the work we've now completed, we are now planning to file for a substantially started status with the government in January of 2024. So just a few weeks away from now. Once we achieve this status, the project permits we have will be good for the life of the project. We're also expecting letters of support from the Indigenous groups that are working with us at the project on the early site construction activities. Having the permits here valid for the life of the project is a major de-risking that should help in terms of our joint venture negotiations that are ongoing with large mining companies. The second large asset we have is Courageous Lake, located in the Northwest Territories. We purchased this project from Newmont and Total in 2002. When we bought this project, there was about 5 million ounces of known gold resources. We expanded the resource to over 11 million ounces, and then in 2012 did a pre-feasibility study that showed a fairly marginal project. That study was done at a time when the Canadian dollar was essentially at par with the US dollar, and the gold price was much lower than it is today. We are now in the process of updating that study. After sitting it on the shelf for several years, we're now working on it. We expect to have an updated pre-feasibility study here that we expect to show a very robust project here. That'll show a project that should produce over 200,000 ounces of gold a year for more than a decade. That study is expected to be completed in early 2024. I think what we're known best for, though, is our ability to access early-stage exploration opportunities, buy those assets, and then build ounces through the drill. When the gold price bottomed in 2015 at about $1,050 after hitting $1,900 just a few years before that, valuations got very low again. We took advantage of that and went out and purchased 3 new projects. The first of which is Iskut, located in northern British Columbia. In fact, it's very close to our KSM project. We see a lot of similarities at Iskut as we saw at KSM, and we're now embarking on looking for gold-copper deposits at Iskut. One came along with a project known as Bronson Slope. We just finished a 23-hole program at Iskut that was designed to increase the size of the Bronson Slope deposit, i.e. adding ounces of gold and pounds of copper, as well as to look for other porphyry targets on the project. The second project is 3 Aces in the Yukon, a project that we acquired at the height of COVID. At one point in time, this project generated a market cap in excess of $300 million to the previous owner. We were able to come in and buy this asset for about $3 million during the COVID period. We like this project. It's a big land package. There's a lot of gold showings up and down the belt. We now have our Class 4 exploration permit and just completed a 27-hole program here, focusing on confirmation of our geologic model and extending the known areas of gold mineralization. And then finally, in Nevada, we purchased a large land package called Snowstorm that sits on the intersection of the three most prolific gold belts in Nevada, the Getchell Trend, the Northern Nevada Rift Trend, and the Carlin Trend. We see a lot of similarities to the two big mines that sit just to the south of us, Twin Creeks and Turquoise Ridge, and we continue exploration every year with the expectation that at some point we will find mineralization similar to what's to the south of us. So when you look at Seabridge, the question you should ask as an investor, what's going to make the share price go higher? I think there are a lot of compelling reasons to consider for owning Seabridge. One is just our track record in terms of our share price performance relative to gold and copper prices. Nobody in the past 24 years has outperformed us. We believe the price of gold is poised to go substantially higher. And if that is the case, our shares should do what they've done in the past, and that's outperform gold and other gold equities. We're now in a world where the large mining companies are acknowledging and looking for new large projects. KSM is as big as they get in a safe jurisdiction with permits in hand. We've been talking about a joint venture at KSM for a number of years. It has not yet happened. We are now finally in a formal joint venture process that's being run by us by RBC Capital Markets. Now with the updated pre-fees in hand and also our ability to show that we will have substantially started designation, we believe that the window is now open to get a deal done. Over this past summer, we had 5 of the largest mining companies in the world visit KSM, and we're now in dialogue with a number of those companies, which we expect will lead to a joint venture sometime into the new year. Getting a joint venture completed with a major mining company, we believe, will unlock significant value for our shareholders. And then finally, our ability to assess early stage exploration opportunities and then deliver on that. We now have 3 early stage projects in the portfolio, which we're just getting started on, any one of which can be a company maker. Finally, one distinction also at Seabridge is the amount of shares that are owned by insiders. Insiders own over 25% of the outstanding common shares of the company, with a lot of other large institutional investors owning stock as well. This is a stock that's very tightly held, with shareholders that have been with us for almost the entire 24 years of existence. Right now, we only have 84 million shares outstanding. With 170 million ounces of gold in the ground, we have over 2 ounces of gold per common share. At today's share price of about $12 US per share, that means that we're trading at about $6 per ounce in the ground, with projects in hand that will be able to produce gold at margins today above $1,000 an ounce. If that's not a compelling reason to own Seabridge, I don't know what is. Thank you for your time today, and I hope you enjoyed the presentation.
Thank you, Rudi, for an excellent presentation. I would like to start with, could you tell us a little bit about yourself and your career first?
Great. I born and raised in New York City, son of immigrant parents, oldest of 5 kids. I attended Columbia University, more because of my backstroke than my grades, but that was okay. My undergraduate degree is mining engineering. I also then stayed at Columbia and did graduate work in finance and economics. I've been in the gold space for over 40 years, most of that time running publicly traded companies. I formed Seabridge in 1999 with a contrarian view on gold. Nobody believed in gold back then. I did, as did my colleagues. And our goal was to simply create the industry's best leverage play to a rising gold price. And if you look at our track record over the past 24 years, we've delivered on that.
By the way, would you just give an overview of the companies that you worked for before Seabridge?
Yeah, so when I was in graduate school, I actually spent some time trading gold on the bullion desk at Phillip Brothers. I also did some engineering work at Amex, Conoco, and a few other large companies involved in mining. When I was in graduate school, I formed a consulting business. I merged that consulting business with Barry Dolbear and Company, which was the largest mining consulting firm in the world. I went out to Denver and opened up a Denver office for them in 1986. A few years later, I was hired away by one of our large clients who was trying to develop some projects in the Western U.S. Stayed with that company for a number of years. And then I was headhunted to run a mining company in Canada called Greenstone Resources, which I ran for a number of years. We actually built a number of mines in Central America. And unfortunately, as the mines were getting commissioned, the price of gold fell out from a much higher level. We had a hurricane come through the region, destroying our supply lines. And we were kind of I won't say shit out of luck, but it was a tough time. And the mines were expropriated by the governments in Nicaragua and Honduras. It taught me very clearly how real political risk is, which is why when you look at Seabridge, all of our assets are located either in Canada or the United States. I always believe that you learn a lot more from your mistakes than you do from your successes. And what I learned during that experience with Greenstone was avoid political risk, do not build mines, and keep the share count low. So that's how we got to Seabridge.
What do you consider to be your greatest achievements?
My family, I've been happily married for 38 years to a wonderful woman who has given me a lot of space. And as you might imagine, if you look at our share price performance, we had a lot of ups and downs, and she stuck with me the whole way. 2 grown children that are both living in Denver and very successful on their own. So I'd say that's my biggest achievement.
Could you give us an overview? I mean, you're both the CEO and you're the chairman. How have you built the management team and board at Seabridge?
Yeah, so the board's evolved over time. When I started the company 24 years ago, obviously directors get older, some retired, which we've had a number of that. Unfortunately, we also had 2 directors pass away on us while being directors, which was obviously a sad moment. But what we're looking for at board is to make sure that we cover all of the necessary disciplines that are required: geology, legal, ESG, engineering, accounting. So we need to make sure we have the right individuals to compose the board to make up the different committees that we need. And if you look at our directors today, I think we cover all those boxes. From the senior executive time, I'm looking for people that have done it successfully before. People that have been involved with very large projects in their career, and people that still want to engage on big projects. When you look at the industry, as individuals move up the corporate ladder, they're moving further and further away from projects and involve more with managing people. The better technical people and exploration people, they want to be involved with projects. And at KSM, we can provide that to them. So if you look at our senior management team, it's individuals that have come from the likes of Newmont, BHP, Freeport, Placer Dome, some of the largest mining, Barrick, some of the largest mining companies in the world that have the experience, but also want to be engaged with projects.
So the insider ownership is, as you mentioned in the presentation, it is high in Seabridge. But how large of an equity stake do you personally have?
We like to say, my wife says we're all in on this one. We have 95% of our family's net worth in Seabridge common shares. I think we own just over 1.2 million shares of the company. We have some RSUs that are out there that have not vested yet, which will vest when we get joint ventures done and substantially started designation completed. I've got all of my net worth. I'm a believer in terms of what we have. That's why I'm comfortable owning one sentence I love hearing is that diversification is for those that don't know what they're doing. Hopefully we know what we're doing and value will be created as time goes on.
Then, I mean, a large shareholder of Seabridge and a long-term backer. In fact, your largest shareholder is Albert Friedberg through the Pan Atlantic Bank. What impact has he had on Seabridge and how active is he today in Seabridge?
Well, he's a pretty passive investor. I do obviously speak to him on a regular basis to keep him up to date in terms of what's going on. But Albert's specialty is in commodities and currencies, not so much in mining. But we did help him years ago with a situation he was in a company called Arizona Star, where we stepped in, took over the board, and then eventually sold the company to Barrick for about $800 million in cash. So I think we earned a lot of stripes with Albert by getting him through that challenging period he was facing at Arizona Star. But he's been great. I mean, I don't know where we would be without him. You know, in the early years, he continued to fund the company year in and year out when it was a difficult market to raise dollars in. And today he remains, our largest shareholder by far.
So with that, I would like to move on to the KSM project. And could you just tell us the story of the KSM project from the year that you, or even before you acquired it up to now?
Yeah, so it was owned by Placer Dome. It's no secret that a number of my top exploration guys in the company came from Placer Dome, so they were familiar with the project. There was a time when the major gold mining companies were willing to sell assets for pennies on the dollar. Our industry does not do a good job, in my view, in terms of allocation of capital. The big companies tend to do their acquisitions at market tops and pay a lot for them. And then when the market goes against them, that's when they're forced to sell non-core assets to generate cash to pay for their past mistakes. And this was a perfect example at KSM, where Placer Dome had spent over $25 million defining the first 2 deposits. and we were able to buy it at $200,000 at that point in time. When we purchased the project, we saw exploration upside. Never in our wildest dreams did we think it would grow to the size it is. From the 3.4 million ounces we acquired up front to the 150 million ounces we have today, that's quite a jump. But along with that increase in ounces came, challenges and other issues we had to deal with. The project got so big so quickly that it became very clear to us that we couldn't do it on our own, and we needed a major mining company as a partner. So then a lot of the work transpired into what work needs to be done to secure a joint venture partner on terms that we'd be happy with as shareholders. And I think we're now finally at that point.
A great part of Seabridge's success has been to maintain a high ounce per share count. And of course, you have a very large resource, which helps. But could you add some color on how you succeeded in achieving that?
It's just been discipline. We look at opportunities and we have to convince ourselves and our board that acquisition or that work program will result in growing ounces on a per share basis. We don't have revenues, so our only source of capital is either to sell common shares, which we do each and every year, or to sell non-core assets, which we've done in the past as well. And that has allowed us to go out and find opportunities and then raise the dollars and then offset that dilution through drilling or by buying assets. And, you look at that chart we have up there that shows the history of the company and share count relative to ounce count. We've delivered on that.
You had a PFS, I think it was in 2012. You had an environmental assessment. So in other words, you were permitted and you were on the way of achieving a joint venture in sort of 2015 to 2017. What happened and why did you do a new PFS?
Well, if you look at what was going on in the industry, our timing sucked. So we got our environmental approvals in 2014, and that was always a risk there. A lot of people didn't believe that a project of this scale would get approved in British Columbia. It did. So coming out of 2014, we received our federal approvals in December, and then we start to look to bring a joint venture partner in 2015. Well, guess what? 2015 was a horrific year in the industry. Valuations got decimated. And once again, the big mining companies started focusing on what they can sell versus what they could buy because they had blown their balance sheets up so high at the prior market tops and taking on a lot of debt. So it was not a time, although we had a project that was ready to go, the big companies were not looking for projects. So we continued to work on it, did updated pre-fees, I think in 2020. Unfortunately, it was a time when COVID hit. So we had a new project to show, better interest in the market, but then COVID hits, which shuts down the ability for any big company to do proper due diligence because site visits couldn't be had for about 2 years in Canada. It was at that time we also started to face the issue of our permits expiring by 2024. So we asked the government for a 2-year extension, which we got. It was also a period where we decided to go out and do the work necessary to get substantially started designation and buying a fifth deposit that we thought would improve the project. If you look at all of the previous mine plans up to the 2022 mine plan, all those previous mine plans incorporated both open pit mining and block cave mining, with block caving development having to start in the first 10 years of mine life. Unfortunately, in our industry, both on the gold side and the copper side, there's very few companies that know how to block cave or have ever done it. So that was also a challenging aspect. By buying East Mitchell from our next door neighbor, we're able to show a project here that now goes for more than 3 decades, open pit only, before you need to start considering block caving. Although it also turns out that all 5 of our deposits actually can be mined as open pits if you can find a place to put the waste rock. So the project has evolved dramatically over time. We think it's been de-risked, and we're now at a point where the stars are lining up. The big companies need new projects. The gold industry is running out of reserves. The copper industry needs new projects to sustain, demand that's going to happen, growth that's going to happen over the next few years. And here we are sitting with the project, good metal prices, and a project that's permitted, substantially started designation soon in hand. And so I like our chances now.
Excellent. And I understand the rationale. You get more potential buyers or joint venture partners, but switching to open pit. But could that present any sort of additional difficulties with permitting the project?
With permitting the project, no. But with partnering the project, absolutely. If you want to run a successful competition and auction, you need a lot of bidders at the table. And over time, there are very few companies that are willing at those points in time to step up and really look at this opportunity, worried about what the shareholders might say. Well, now we're at a point in time where the big companies are again focusing on new projects. So for the first time, we actually have a lot of bodies at the table interested in advancing joint venture dialogue in KSM, which I believe will then lead to a successful conclusion, sometime next year.
So if you move over to substantially started, I mean, per Q3's financial statements, you have spent 166 million Canadian on this year on property, plant and equipment, and I assume that most of that, or the majority of that, is for the KSM project to get substantially started. And could you add some color on how have you exactly used those proceeds?
Yeah, so by the end of this year, if you look at just substantially started spend, which is early site construction for permanent infrastructure, we probably will have spent about $450 million Canadian on substantially started activities. The focus has been on roads, on camps, on power, on bridges, and on fish compensation. And we've made successful, moves forward on all 5 of those fronts. The other nice thing about the substantially started activity, it allows us to engage with our First Nations well before the final construction decision is made. In fact, more than 50% of that spend is going to First Nations related companies, either direct award contracts to companies that they have in-house or to companies they have joint ventures with. So even before a production decision is made here, the local communities are seeing the benefits of a project the scale of KSM. That's why we're confident that when we apply for the substantially started designation in January, we should be able to have the First Nations supporting that application as we move forward.
So in other words, I mean, as I said, I spent 450 million Canadian on substantially started activities. How much capital are you looking to spend next year?
We're still in the process of completing budgets for next year. Our budget review process happens during December, and then we get budget approval in January. We're going to exit the year with a strong cash position, probably over $70 million in cash on the balance sheet. Additional funds may be required next year. We have an ATM in place that allows us to access the market on a regular basis without a lot of issues in the market. Because of our liquidity, we're able to raise dollars quite easily through the ATM. And also, we have not been hesitant to sell non-core assets over time. Courageous Lake may be an asset we decide to sell to generate cash. It's an asset that we believe will show a very robust project when the updated pre-feas is done. And we also think we're in a market now where there is a demand for projects of that scale in safe jurisdictions like Canada.
How are your relations with the Nisg and Tahltan First Nations?
Fantastic. I was just up in British Columbia last week, met with the Nisg Nation, the Tahltan Nation. They're quite pleased with the project. I mean, the amount of work that's flowing through to them now on substantially started activities is a big number. We're providing employment to a lot of people within their communities. So our relationship is very strong. When we applied to the government a few years ago at the height of COVID for that 2-year extension on our existing permits, it was because of the support of the First Nations that got us those extra 2 years. So they've been supportive throughout the years with us, and we look to continue working with them in a meaningful way.
Perfect. And you already have an impact benefit agreement with both of these First Nations groups, right?
Yeah, so the ones that we have impact benefit agreement in place are the Nisg Nation, the Tahltan Nation, which provides certainty of contracting opportunities to them. So as we started substantially started activities, you're dealing with 2 First Nations there. You give one contract to one of them, the other one is not happy, and vice versa. So at our suggestion, they formed a strategic joint venture between the 2 First Nations called the Treaty Creek Limited Partnership. And right now we're contracting all the work that would go to First Nations directly to that Treaty Creek Limited Partnership joint venture. So they're both happy now because they're both sharing the work equally. And that was a major achievement, to be honest, to be able to bring 2 First Nations together, to work together to a common cause on a project that'll have a big part of their future.
So in other words, it seems like you're fulfilling the first criterion of substantially started, but when do you expect to apply for substantially started? And my follow-up to that would be, when do you actually expect to obtain the EIA?
We have the EA. We expect to apply for substantially started in January. And, we expect to then have the decision from the regulators sometime during 2024.
If you have the environmental assessment, are there any other sort of major permits, I don't know, for water or does that cover all of it?
Yeah, so the environmental certificate, the environmental assessment certificate gives you the ability to then apply for permits that you need for construction and operations. I think in total, last count is like 150 permits that are required for KSM. I think we have about half of those in hand now, a lot of them dealing with the early site construction. Permits that include the roads, the camps, the fish compensation, the bridges. Permits that include all the tunnel portals, as well as the first 100 meters of tunnel access from those portals. So those permits are already in hand. Additional permits will be granted based on final detailed engineering, which comes about as a result of the bankable feasibility study, which is the first step we're looking for in a joint venture process with our partner, that they would come in, complete the bankable feasibility study, which can then be used to apply for the different remaining permits that are required.
Thank you, Ryan, for attending this interview. Could you tell us a little bit about yourself and your career?
Yeah, you bet, Jasper. Yeah, first, thanks for having me. Yeah, my career expands 25 years plus in the mining industry. I've worked for the majors, the mid-tiers, and the juniors across the precious metals, base metals, and bulk commodities part of the industry. So I've worked for the likes of Rio Tinto, Lundin Mining, New Gold, Arizona Mining, South 32, and most recently, obviously, currently we're here with Seabridge. And last 16 years of that 25 plus year career, it's primarily been focused on project delivery within the industry. Consisted of 2 open pits that been a part of bringing the projects online, and 2 underground mines during that time.
What brought you to join Seabridge?
I think a couple of the things that really attracted me to Seabridge. First is obviously when I met Rudi, our CEO and chairman, in the team that he's assembled over the 20 plus years of the formation of Seabridge Gold was a big attractant to it. As first of all, the second and third part was really around the opportunity with my background of project transition and delivery, of taking a mega project like KSM Mining from basically a junior, which is what we are, a large junior operation, to partnering that with a major, and then taking it through the project life cycle. Thirdly, the other part that's attracted me to Seabridge Gold is what Rudi's built the company on, which is continuing to create that shareholder value in the gold industry. So basically, looking at how do we grow more ounces in the ground per shares outstanding. So really staying in that world of looking after shareholders, being non-dilutive to them, working really hard at that, and going out and exploring and finding new assets, new opportunities, and growing the resource bases of those assets.
So with that, I would like to move on to your flagship project, the KSM project, a gigantic project. You are currently performing activities in order to be designated as substantially started, so you can get your environmental permit for the rest of forever, so to say. And there are 3 criteria to achieve that designation. Could you explain each of these criteria?
You bet, Jasper. Yeah, it's a bit unique. We talk about substantially started in a lot of projects globally. As you move through a project life cycle, right? You start with the different various studies, moving it through from order of magnitude, pre-feasibility study, feasibility study, and then into execution. And along with that, you're obviously permitting and doing things with regulators and governments and indigenous partners on those fronts. And even within Canada, a very similar process plays out that way as well. One of the unique things, though, about the British Columbia province of British Columbia is they also have an early part designation, which is referred to as substantially started, to certify or lock in the environmental assessment certificate. So the environmental assessment certificate was received in 2014 from the provincial government in joint partnership with the federal government. And the federal government then has given it's clear, it's received, but the provincial government also asks for within 10 years of that project being given its environmental assessment certificate, it wants to see those assets be developed What they don't want to see is for mining companies to come in and basically lock up resources and sit on them for years and years and years. So they've put this clause in place that talks about substantially started, and there is 3 pillars to what designates or qualifies as substantially started. And once you've achieved that, then you have also locked in the environmental certificate, assessment certificate with the provincial government as well as the federal government. And so that's what we've been focused on over the last 2.5, 3 years. The 3 pillars of that then, when they look at have we substantially started, is what has been your Indigenous partner support and engagement. That is one of the probably largest pillars around that, is making sure that as we've worked in these traditional territories and traditional lands, that we've engaged appropriately with the Indigenous partners. We've created economic opportunities and benefits that can be from anywhere from supporting businesses to direct employment. So that would be the first pillar. The second pillar is around permanent infrastructure installation. So one of the things that does not qualify for substantially started is if you come in and you do work, let's say that you put in camps that are temporary in nature, or you develop roads that are only temporary in nature. What I mean by that is if you come in and put an access road in that doesn't serve you beyond construction and into operations, then those kinds of infrastructure or assets don't qualify. So when we look at substantially started and we look at it with our Indigenous partners, we are looking at parts of the project that are, one, permanent in nature and are there for construction and into operations. So they are the initial infrastructure required to not only start the project, but are there for the life of the operation. The third pillar then is around the capital investment that you've made into the project initially. So it's not the full funding of the entire project, right? But it's what percent of that have you invested into the project, and they'll take a look at that as the third pillar. And up to date, right, we've spent over almost $500 million. By the end of 2024, we'll have spent $500 million. And since we started on KSM in 2000 up through 2023, we've already invested over just about $1 billion into KSM, and that includes permitting, engineering, and construction.
Could you in detail walk us through the activities that you are doing as part of Substantially Started and the progress that you have made?
You bet, Jasper. So when we talked about I just mentioned the $500 million that we'll have spent by the end of 2024 in this. Right now we're about 425 million. We'll be near 500 or north of 500 million at the end of 2024. A lot of what I'll talk about here has been just that. It's been that 400 to 500 million of initial capital that's gone in to really de-risk the front end of the main project that comes behind this. And really, it's been completely focused on that permanent infrastructure installation work that the Indigenous communities, or partners, I should say, could be a part of and have organizations or companies that can perform that work in their area. So if I start off with some of the things that have been done then, initially I would talk about the land clearing activities that need to take place before you can install permanent infrastructure. So that can consist of logging operations in land clearing and prep prior to permanent installation of roads or camps or bridges, substations, power lines, etc. And I'll get more into those in just a moment. But of that initial land clearing, when we look at the KSM project and the vastness of it, think of KSM as kind of two sides of an overall operation. There's 2 areas I'll refer to time and time again here. One's the Mitchell Valley side, which is where the 5 ore bodies sit. And then we talk about the treaty side, and that's in the Treaty Valley, and that's where our process plant will sit and our tailings management facility. So when we look across the project and we look across kind of into those 2 areas, the Mitchell Valley and the Treaty Valley, we've done substantial land clearing in those areas to prep for the permanent infrastructure that'll come out of the ground there. So things that we've done a number of camps on both sides that will not only house construction, but will also house long-term operations. We've cleared areas and ready to receive what we call our FLT1, which is our treaty side substation. The ore processing center, so basically the footprint of where the process plant will be, water diversion channels, portal pads, temporary water treatment plant areas, the muck pads, our water storage dam, and in our basically vast on-site road network. So all those areas we've moved through from a tree clearing and site prep in those areas. So substantial work has been done there to then receive those permanent infrastructure features. When we look at power is obviously important to any project and is key and fundamental, and it's there from the initial days all the way through the life of mine and operations. So a big piece of work that we've also been working on over the last 2.5, 3 years is a partnership actually with BC Hydro. They have basically built up through this region what they call the Northwest Transmission Line. And off that Northwest Transmission Line, we have partnered with them to basically build what we call a stub line that will be the receiving line that diverts power off the main transmission line into our site. And so we entered into an agreement in February of 2022 with them to build what we call the Treaty Creek Terminal. And that's basically a transfer station, again, off the main line, and takes that power then into the treaty side of the project. That Treaty Creek Terminal then is in year 2 of a 4-year project. So it'll continue on through about mid-2026, and then it'll be completed and ready to be energized at that point. And I'll talk more about that in a little later on. That's been a big piece of work as well, and we've partnered with that. Not only have we partnered with BC Hydro on that, we've also partnered with 2 First Nations through what they call the Treaty Creek Limited Partnership, and can get a bit more into that as later as well too, because that's been a first for within the province and the first across Canada of the way the 2 First Nations have partnered with BC Hydro and with KSM on this project. When we look at camps, there have been a number of camps that we've put in place. Again, one of our larger camps that will serve not only in construction but into operations is what we refer to as Camp 11. It's on the treaty side of the project. It's a 210-bed facility, has individual rooms with ensuite toilets, shower, large screen TVs, desks, everything all inclusive in the room. So ensuite within the room. It's got state-of-the-art current workout facilities, theater room, obviously has a kitchen, has all the amenities when for working in remote areas like that to try to give the best comforts we can to the individuals that are on those kinds of longer rotations into these remote sites like this. On the Mitchell side, we've had a couple of camps over there too. We have one called the Sulphurettes Camp that we've been working on and working out of. And again, that takes care and looks after a lot of the workforce that works over there on the mine development side, as well as a camp over there called Camp 9. And Camp 9, as we've been working on and constructing it, it'll house somewhere around 140 beds once it's fully completed. And it'll be focused on really the tunneling work that needs to go on. So we start to bring in the miners that will work on developing the tunnel between the Mitchell Valley and the Treaty Valley, as well as bringing in the pre-strip miners, people that will start to develop the open pits. So it'll house those individuals, and again, those will not only be camp will be required in construction, but also in through operations. When we look at roads, we've built quite a few kilometers of roads. We're upwards in the 20 kilometers of roads. So until 2022, all of KSM was heli support. So in order to get into the site, whether it was on the Mitchell side or Treaty side, you pretty much needed to get in a helicopter. One of the things that is critical in de-risking the front end of any project, I would say, is the things that we've just talked about, from camps to power, but also getting access in by land. So getting roads into the site is instrumental in helping to de-risk the main project that comes behind it. So on both sides of the project, we've been working in the Treaty Valley on a road we call the Treaty Creek Access Road. That takes us off of Highway 37 on the east side of our property. So a main highway that runs through the region comes right off of there, and it'll head right up to the process plant area and the tailings management facility. So that road has been progressing over the last 2 years, progressing well. When we look at, there's a branch that comes off of that road. It's called the North Treaty Creek Access Road. That's a road then that splits off, and we'll continue to develop that road as well. When we flip over to the Mitchell side of the project, so again, needing land access into the project site, we have a road over there we refer to as the Coulter Creek Access Road, and it comes off of the SK Mine Road, which is a well-established road that's been there for many, many years. It's still maintained in great condition. We come off of that road, and this Coulter Creek Access Road then will be the land access into the Mitchell Valley, which will allow us to eventually bring in by land the large mining fleet, equipment, personnel, supplies, materials, etc. So again, getting that road in early on is critical to helping de-risk and manage cost in the main project. We've got bridges as well. Obviously, we have in northwestern BC, water management is key to any of these projects up in that region. We obviously have a water balance surplus in the area, just due to that coastal range effect that you get from precipitation, whether it's in the form of rain at different times of the year to heavy snow load, etc., that come in that, and with that snow load, then in the lower elevations, certain times of years we get larger runoff or freshet, as we refer to it as, or breakup. So there are a number of substantial bridges that we've crossed, substantial rivers. So one of them is the Belle Irving River. It eventually goes and flows into the Nass River. We've built a bridge that spanned across that river, as well as many other smaller bridges coming across different streams and other rivers in the area. That bridge in particular, again, the Belle Irving River Bridge, is part of what I referred to in the Treaty Creek Access Road, which is as you come off of Highway 37, you come up to the Belle Irving River, that bridge is installed, you come across that bridge, it's complete, and you head on with the Treaty Creek Access Road from there, and that'll take you up to the process plant. So that, again, is a life of mine type bridge. Eventually, that'll be the bridge where people come in and out of the process plant side, as well as the concentrate trucks will come and go from that road and across that bridge onto Highway 37, and then from there south to the Port of Stewart. When we look at fish habitat is critical to the success of any project in Northwest BC. So for Substantially Started, we've also completed our first of 4 fish habitat offset programs. The one that we've completed is called the Glacier Creek Fish Habitat Offset Program. It was successfully completed with all the bulk and final earthworks, the fish habitat structures, features, specialty gravels, the woody debris, mulching, and revegetation that's gone into it. It's designed as about a 6-pond kind of ecosystem that creates basically spawning grounds and protection for yearling native fish. The species in particular that it's built for is around the salmon, the various types of salmon that come up through the Belle Irving River, and the Dolly Varden. Those are the primary species there that it's built for on that front. So that's been a big success for us of completing that first of 4. And when we talk about our partners, our indigenous partners, that's something that is, as they went through the EA process and they commented on it, it's around the protection and preservation of fish and the importance of that to them. And so this is a big kind of first for us and for our indigenous partners that worked on this to have completed that and brought that fish habitat feature into existence. So really proud of that. Really proud of the team that completed that work. So when we look at substantially started, and I guess the permanent types of infrastructure that's been put in place to date, out of that almost 500 million that's been spent, right? 80% of that spent has gone into indigenous companies and joint venture partnerships with indigenous companies, and that's either through contracting or direct employment.
How much of the initial Capex, which is at $6.4 billion, could you subtract by performing this substantially started work that you summarized for us?
Yeah, so when we looked at substantially started in the 6.4 billion, when we were working through the PFS update in 2022, we obviously had already started on our way with substantially started. So the dollars that are being spent from 2021, 2022, and 2023, they were removed or basically identified as already have taken place when the PFS was being put together. So they were removed from the capital estimate. They were looked at as costs that were already being incurred and not included in that study. So when we look at capital, the 6.4 billion, it is absent of the first 3 years of substantially started work. Now, if we go further, and we plan to go further into 24 and beyond, then those early works would be part of what was included in the initial capital of 6.4 billion.
When is BC Hydro expected to finish the construction of the switching station?
Yeah, so as I mentioned a little bit earlier, BC Hydro is in a multi-year project there that we started in February of 2022. Their current in-service date, as it's referred to, and that would be the electrification of the Treaty Creek terminal, is in second half of 2026.
When it comes to power infrastructure, what remains after the switching station is complete? I assume that you will need power lines when you start or when you begin construction. And
yeah, you bet. So obviously, power is fundamental and key as permanent infrastructure into any project, and a lot of times it's a big de-risker to be able to get that in. What it does allow us to do specifically is coming off the Northwest Transmission Line and with BC Hydro. Again, it's all green energy. It's green power. It's hydro generated power. So a couple of things, that does, it helps us to continue to work towards a carbon neutral footprint, which is really what is a big attractant to the KSM project with the partnership of hydropower coming into the site. It also eliminates the need up front a lot of times in early projects where you have to bring in a lot of generators, etc., to run that are usually typically diesel type fired generators. So it allows you to get out of that mode, either minimize it or get out of that mode sooner. When we talk about the power infrastructure that needs to come behind the TCT, it's primarily all on the site itself. It would be coming off of the TCT and bringing the transmission line into site, and that transmission line will come into the process plant area. It's then at the end of that transmission line building what we call FLT1, or our first substation. And then from there, coming off of there, we have to put power through the Mitchell Treaty Tunnel. That would then take us over to the Mitchell side of the project, and then that's where our second substation would be that would energize the mine side of the property.
Thank you. And so you will have access to 245 million megawatt of power. Will that be enough once you are in full commercial production?
Yeah, that'll be enough. And that's actually a phased in 245 megawatts of power. But we have secured the 245 megawatts of power off the Northwest Transmission Line with BC Hydro. So we're in the queue for that. One of the things, meeting with BC Hydro most recently was the conversation between KSM and themselves was, them talking about how we are basically an anchor client off that Northwest Transmission line. We will be the single largest consumer of green hydropower for them. So when we look at our mine plans, our throughputs, our ramp ups, etc., the 245 is a max need. So we don't need that necessarily day one. We grow into that 245 megawatts of power, but somewhere around year 3 to right around year 3, we start to come into that full operational power.
What inflation expectations do you have on operating and capital costs from the pre-feasibility study that was published last year?
What you'll find, and when you look into the pre-feasibility study, is obviously we do economic sensitivity, right? And we flex different parameters, whether that's gold price, copper price, other silver, moly, exchange rate. We look at capital costs and we look at operating costs. And we flex those sensitivities around the impact on IRR and NPV. And what you'll find in an asset like this, when you are a long life, low cost type asset, NPV actually, after the first 5-7 years, right, the value sits up front there on your payback period. But this is a 30 to 50 year plus mine. So when we look at sensitivity to capital growth, it's not really that sensitive to capital. I would say that it's actually more sensitive to the gold price, to the copper price, and to exchange rate. When we look at the inflationary environment that we've seen and been in, maybe it was good, maybe it wasn't. But when we were putting these estimates together, we were actually right in the spike of a lot of inflationary cost in quarter 2 of 2022. So we've actually seen some prices recently, like steel prices, for instance, actually come off compared to what's in the study. But there are other items that have stuck from labor costs and different equipment costs have clearly increased on that. But what I guess I would say to you, Jasper, and to others that may be listening in on this is that is also offset, by the upward where gold price has gone, where the copper price continues to hold, and also the Canadian dollar relative to the U.S. dollar. Those appreciations in value or depreciation in the Canadian dollar have really helped to offset that inflationary pressure we're seeing on the cost side.
With that, I would like to speak a little bit about mining. So you changed from block caving to open pit in your PFS. What advantages does open pit have contra block caving with regards to KSM?
Yeah, it's in when we did the initial 2020 PFS, obviously the block caves were earlier in that mine life, and when you look at the 2022 PFS, the block caves have moved out into what we call the PEA, which is post kind of the first initial, post the PFS and post the first 33 years of mining. What I would say about open pits versus block caves is open pits are easier to start up. They're easier to ramp up. They have a much lower capital cost than block caves initially up front. And, the open pits are much more flexible to operate than the caves. You're able to focus more on dilution and things like that, whereas in block caves, you are going to get dilution, and sometimes that's hard to predict even when you will or won't get that.
So Ryan, could you give us a quick overview of the 5 deposits constituting the KSM project?
Sure, Jasper, you bet. So the KSM project, each has 5 actually world-class deposits on its own, and if you actually look at any one of those, it's comparable to any of the largest mineable deposits in the world. The 5 deposits that we refer to, all within the same land package, is the Mitchell deposit, the East Mitchell, the Sulphurets deposits. Those 3 deposits, the most of the value comes from the gold as well as copper, but the primary value driver is the gold in those 3 ore bodies. The fourth ore body is the Iron Cap, and it's actually it's weighted fairly equally in the value of copper and gold. And then our fifth ore body is the Kerr, and its value comes primarily from copper. So when you look at the deposits, and all the deposits are exposed at surface, you can see that from touring it, or even from Google Earth if you want to have a look. But when we combine all the 5 deposits together, we have an 11 billion ton resource. And of that 11 billion ton resource, in it, we have contained 54 billion pounds of copper and 154 million ounces of gold. When we look at the PFS that was produced in 2022, we're only mining 21% of that resource in its totality. Our current limiting factor of the 5 deposits is really our tailings management facility. It's currently permitted for 2.3 billion tons of material. So when we look at the 5 ore bodies, we are picking the highest value material out of the 5 deposits. And that's what's really driven that mine plan. As we look at with partners, etc., we are having great conversations and discussions, as you get certain majors that are more gold-centric and others that are more copper-centric. So a lot of flexibility here with the 5 deposits.
So there's a separate PEA for the more copper-rich deposits, Kerr and Iron Cap, as you mentioned. Why have you designated block caving instead of open pit for these 2 deposits?
So in the 2022 PFS, the primary focus of that is between 2020 and 2022, we'd acquired the East Mitchell. So in the 2020 PFS, we had the block caves earlier on. With bringing in East Mitchell, it allows us to be open pit centric for the PFS. And again, as I'd mentioned earlier in our conversation, it allows more miners to come to the table and see value in KSM as a long-term opportunity. As we got into 2022 and as we've been in discussions with partners, we obviously originally had focused, and it's in the PEA, that the Iron Cap and Kerr were block cave approach. Since then, we have internally confirmed that both the Kerr and Iron Cap can be mined as open pits. So this decision, which is now our preferred approach, will be a conversation we'll continue to have with potential partners. But these 2 deposits still can be either approached as either an open pit or underground from a block cave perspective. But we now see value in being able to develop both of those as open pits.
Could you summarize the flow sheet that you will use in the recovery methods?
Yep. So with our flotation recovery, or basically our process plant, it's a traditional, very proven, sulfide flotation, and then a carbon and leach side process plant. I'll talk a little bit about both of those. But the copper concentrate sulfide flotation, it starts out around your traditional bulk rougher flotation. In that bulk rougher flotation, we're doing the recovery of the copper, gold, and silver and the moly sulfides together, and we're suppressing the pyrite, and that's going out in tails on the rougher circuit. The pyrite flotation then of the rougher tails is where we recover off a gold and silver bearing pyrite concentrate. The rougher flotation concentrate is what comes off the rougher, is cleaned by using a flotation to produce a copper concentrate, and we'll end up with a final copper concentrate of somewhere between 23 and 25% copper, and with a very high gold content. So in that copper con, around that 23 to 25% copper, we also will be have about 65 grams per ton of gold with it. So high gold content reporting with the copper con. So obviously that'll be attractive for smelters to be able to take off the gold as well as produce a copper cathode at the end. When I talked about the suppression of the pyrite tails in the rougher, it then goes into a pyrite flotation circuit, and in there, as I said, we are recovering a gold silver bearing pyrite concentrate. That gold bearing concentrate, along with some of the cleaner circuit tails that are coming up, we actually reintroduced those 2 streams together, and then we enter into a cyanide solute in a CIL circuit. And out of that CIL, or carbon in leach circuit of that stream, then we're actually liberating out the gold silver from the pyrite, and we're producing a gold doré bar. So those are the two end products that'll be coming out of the process side of our operation: a copper concentrate with high gold content, 65 gram per ton, and then a gold doré bar.
Do you have any significant amounts of deleterious elements in your deposits?
So fortunately, we have a very clean concentrate. With all the met work we've done to date on that, we have elements, right? But none of them are at a level where they turn into penalties for us. Really have the absence of bismuth. There is trace amounts of selenium, lead, zinc, but again, none of them are in the levels that even come remotely close to penalties in relation to a copper concentrate being sold into the global market, into the smelters.
Thank you. And as per the pre-feasibility study, could you walk us through the construction phase and following commissioning and ramp up, and name sort of major milestones in that process? I know it's a long construction phase, but still.
Yeah, well, with the mega projects, right? I mean, it's definitely, these aren't a 2 or 3 year build, as maybe some operations that are more of a 10-year type mine life. This has a 33-year mine life from a PFS perspective, and then an additional 40 plus years on the back end with the PEA. So you've easily got a 70 plus year, 100 plus year resource here. And with that, then, obviously comes a larger scale operation that needs to be constructed. So when we look at that, then our current construction plans start with, it's a 6-year construction plan. And again, the work that we're doing and substantially started that we talked about earlier and in future early works is all about de-risking the main construction of the 6-year construction project. It's getting that early infrastructure in place. It's opening up the site, making sure we've got the roads and access in, the different headings that get us up to what we call the Mitchell Treaty Tunnel. The Mitchell Treaty Tunnel is a 22-kilometer long tunnel that will connect the treaty side to the Mitchell side. So our early part of our construction project will be really focused around continuing that work, finishing that work, developing the tunnel between the two sides of the property. And then from there, it'll be around water management infrastructure. We need to be able to manage water appropriately, and we will. We need to be able to put that infrastructure in place prior to us starting to develop the mine area or the tailings management facility. So later in that 6-year construction period, then we'll start the pre-strip of the actual open pits. And within about 18 months out, we'll start the construction of the tailings management facility and the process plant. So when we look at it from a pre-strip perspective, the Mitchell pit, which would be the first pit we'd enter, it will start in a 6-year construction period. It will start after year 4 of construction. And then commissioning will start after the 6 years of construction. I don't know if that made sense, but
it makes full sense. And one really has to think about the vastness of the scale of the KSM project. But what do you expect to change with the feasibility study? Say that you go with Mitchell, East Mitchell, and sulfurates as you do in the pre-feasibility study.
Yeah, with the feasibility study approach right now, and obviously this will be established with a future partner, and there's the conversations are already happening on that front as we explore potential partners that are looking at the KSM project. One thing has more or less come to conclusion with all the conversations and also our internal thinking around it. The first 5 years of the mine plan are unlikely to change. Starting with the Mitchell pit, it's the fastest way to pay back on the initial project capital. You've got spectacular grade outcropping at surface. You have 0 strip ratio. You do have some initial pre-strip just on the sides to get the layback correctly to be able to access those ore blocks. But those ore blocks are there. They're there today. You can go out and walk on them. We don't believe that the partner will want to deviate far from that plan. especially through that payback period, right? I mean, all projects really, when you look at economics, it's around that IRR, that payback period, and making sure we're getting the highest value material through to get that payback achieved, and then getting on with many years of free cash flow coming in through the operation and into the business. If copper price accelerates disproportionately to gold, then maybe a potential partner might want to look at bringing Kerr in sooner. So as I spoke earlier, the Kerr deposit is majority of its value comes from the copper versus the gold, and they might want to accelerate and bring that online earlier. Let's just say after year 5. They might want to do that year 5 out through year 10, somewhere in there, and bring a more copper centric mine plan earlier in the overall mine plan.
But as of now, Kerr is not in the mine plan, but in the PFS, right? It's just Mitchell, East Mitchell, and Sulphurates.
Actually, Kerr is permitted in the EA. It's not shown in the PFS. That's correct, but it is permitted. We can go into that area and start an open pit. On Kerr.
Excellent. And how involved would you be in the feasibility study and build of the project once a joint venture deal is struck?
Again, that comes back to obviously the conversation, negotiations that need to go on with the partner, and where is the partner at, just internally with themselves, right? Where are they at with the ability to staff a project team, to take on a feasibility study, to be able to continue on with early works, etc. So when we look at that, and when we're in conversations, and they're very open conversations around this, we believe that we'll be actively involved in the initial 12 months. So the feasibility study, we've got a lot of institutional knowledge, to be able to transition that knowledge. So transition the long-term knowledge of the project. We've got ongoing Indigenous and government relationship management that will continue on. Jasper, this project and this team, they've been working on this since 2000. And then since the EA was approved in 2014, right, it's been a continuation of that, of those relationships, of continuing to study the project. So, our interest, we're not walking away from this asset, right? We're looking to partner this asset. So obviously we still have an active interest in ensuring that the asset advances successfully through the project and into operations.
Because you have 4 other projects, all of which could be company makers. I mean, you have Iskut, you have Courageous Lake, you have 3 Aces, and Snowstorm, and you're drilling all besides Courageous Lake, which you're updating the pre-feasibility study for. Could you just give us a quick exploration update on the projects?
Yeah, so Iskut, we believe, could be another KSM. It has the same age of mineralization, the same structural elements, and there's known gold and copper there. This year we had about an $8 million program. We drilled 23 core holes there, focusing on expanding the Bronson Slope deposit, which already has 2.2 million ounces of gold and about 500 million pounds of copper. We were successful in terms of growing that deposit. We're still in the process of updating the resource model, and we'll have a new resource estimate for Bronson Slope probably early next year. In addition to Bronson Slope, we also looked at another target called Snip North that we believe is another porphyry deposit, and we've had success there in terms of finding gold and copper. Based on this year's program, I think it's safe to say we're going to go back with another meaningful program in 2024 to continue the success we had in 2023. 3 Aces was the second largest program we had this year. We drilled 27 holes there, both a combination of core and reverse circulation holes. This year's program, so historically there were a bunch of potty known gold mineralization areas called Hearts, Spade Zone, Club Zone, and all that. We believe, based on our interpretation of the geology there, that these zones actually have the ability to connect, which would mean a much bigger system. So this year's program was to really go in and further test our geologic model that these zones do connect. It was also designed to ensure that our next program would be a program that we can start to calculate resources from these different areas. So at 3 Aces, we'll have another program that goes back next year, focusing on resource delineation. Snowstorm, the one in Nevada, we had a 2-hole program. We've been taking that slow because exploration in Nevada is quite challenging and expensive. In fact, at Snowstorm, we have a very deep tertiary cover on top of the zones of interest. So in some cases, you've got to go down almost 1,000 meters to get to the zones of interest. At today's share price, we don't want to do a lot of dilution to fund the program at Snowstorm, but we're willing to fund programs in Canada where we can use flow-through financing as a mechanism to fund large-scale exploration programs on Canadian projects. Through flow-through financings, we're able to sell shares at a significant premium to market, and in some cases 40% above market.
Could you give an overview? What is the plan for these projects, especially a little bit further out, doing a joint venture on some of them, or monetizing some of them, or with Curtis Lake, I assume that you're trying to sell.
Remains to be seen. We can take projects through engineering and permitting. It's got to be a great project for us to do that. There are times to sell projects, there are times to buy assets. I think right now we're approaching a time to sell, which is why we're talking about the potential sale of Courageous Lake. I'd say for Iskut, Three Aces, and Snowstorm, it's probably too early to make that determination. We need to get more data, more work done on those projects before we decide whether it's something we want to continue to advance on our own, or something we'd look to joint venture, or something we'd perhaps look to sell. And, we're open to all three of those. I think one problem that happens in our industry is people fall in love with their projects and they keep throwing dollar after dollar after dollar without really throwing dollars after a project that can become a mine. And I think as a result of that, I talked a lot about capital allocation. Our industry wastes a lot of capital on projects that will never become mines. There's a time when you need to just step aside and say, time to move on this one. And we've done that in the past. If you look at some of our previous acquisitions we did in the early days, we've generated to date over $75 million in cash sales proceeds on selling non-core assets at the appropriate time, which helps us to keep the share count low.
With the cash that you currently have, how far do you expect that to last? And what is your strategy for acquiring or raising more money next year?
We're pretty unique. We take it 1 year at a time, looking at what the needs are for that year based on what we achieved the previous year. And as I mentioned, we're now in that process of determining what we want to spend next year. If there is a further need for capital next year, we'll go out and raise it. We have an ATM in place that we've been using sparingly over the past few years that gives us access to capital on a pretty daily basis. We have the ability to do flow-through financings at a significant premium to market. We have the ability to sell non-core assets at the appropriate time for meaningful cash balances. Thinking 3 or 4 years into the future is putting the cart before the horse. We also have to see where we get with our joint venture. We may have a partner that comes in that's willing to fund a lot more activity at KSM as part of their earn-in, which would obviously we'd be welcome to in terms of continuing to advance the project prior to the big construction decision. Yeah, so when we looked at funding substantially started, if we had done the more traditional equity route to raise the $375 million we raised, it would have resulted in more than 30% dilution to our shareholders. That was a big number. That would have really decreased our ounces of gold per common share. Instead, we looked, how can we use the project to fund these activities? And Sprott is someone that's been a shareholder of Seabridge for a long time, a strong supporter, and they have a royalty division now where they were willing to come in and fund us $375 million in the form of a secured note that converts into royalties at commercial production. And when you look at the charge of these royalties relative to what have been in terms of equity dilution, KSM can withstand a lot of royalties. And we don't have any real royalties on it right now, other than what these notes will convert into. When we talked, obviously before we did these deals, we talked to potential joint venture partners to make sure that putting something like this in place would not impede their view of the project. And every single one of them said, not a problem. We'd like to see this work get done. We'd like to remove the risk of the permits expiring. And the charge that we're looking at on these potential royalties is quite small relative to the value of the asset.
Yeah, no, it's we're talking probably less than 2% NSR if you add both the silver royalty and NSR royalty for the sufficient capital to get it substantially started. So that's very much cheaper capital than using a traditional equity financing.
One other aspect on the royalty that I forgot to mention is we actually have the ability on each of those to buy back half of those royalties to extinguish them, which is a nice option to have, especially if you believe, like I do, that the price of gold and copper is going to go substantially higher between now and when we see commercial production.
Thank you, Rudi. And so let's move on to the joint venture. What is your strategy to secure a joint venture partner?
Well, first, it's a limited number of companies that we believe can do this project. You look at the ability to build, operate, and finance, and also to, the First Nations being happy with that partner. There's probably 8 companies or less in the world that check all those boxes. As I mentioned, we had 5 of them visit the site this past summer. Our ask on a joint venture is quite simple. It's a 2-phased earn-in. Phase 1, our partner does the work necessary and sole funds completion of a bankable feasibility study. At that point in time, when completed, they will earn a small, yet to be negotiated, small interest in the project. At that point in time, however, or shortly thereafter, they need to make a construction and production decision. With that construction decision, they're then required to go out and secure at least 50% of the project's capital through some sort of project facility, which we believe is readily available based on the concentrate flow alone that'll come out of this project, and continue to sole fund an agreed dollar amount that will take them from their minority position to their majority position. We know that any partner is going to want to own 51% or more of this project, and we'll build into that structure how much they need to spend on their own to get to that number. Once those dollars are then spent, we would participate pro rata. So the beauty of it to Seabridge is, number one, if we keep a 40 to 49% interest, we're not funding anywhere near 40 to 49% of the project because of their requirement to go out and secure at least 50% of the project's capital in a facility and continue to sole fund an agreed dollar amount. And then whenever we do get a call on capital, it'll be towards the end of the construction life, when our ability to raise dollars will be very different than they would be today. Back in that time, we could look at equity depending on what our share price is. We can look at convertible debentures. We can look at a lot of different mechanisms. Because once this mine is built, and this is an important element, once this mine is built at today's metal prices, the first 10 years of mine life averages over $2 billion of free cash flow a year at today's metal prices, let alone what metal prices may be when commercial production begins here.
I guess we could start with, this is a negotiation question, but how much would you at least, would like to remain of the KSM project within Seabridge?
Our goal in a joint venture is to hold on to 40 to 49% of the project. However, if a company is willing to sole fund the entire project, we'd be willing to take a little bit less. If our capital exposure goes to zero, we'd be willing to take less than 40%, and then it just becomes a negotiation. But our goal has always been to hang on to a meaningful piece of the project while minimizing our capital contribution.
You would not have to put up capital before the final year or the final years of construction, but how would that work with because usually banks or the financiers requires all of the initial capex to be raised before. You don't think that would be the case?
Not with the type of partners we're speaking with. You look at the balance sheets of the companies that we're engaged with, they may choose to finance the whole 50% of the project's capital through their own balance sheet. So I'm not too worried about that. We've had dialogues in the past with previous potential partners, and they didn't see that as an issue.
With how many companies do you have confidentiality agreements?
As I said, there's 8 companies that we believe could be potential partners here, and we've engaged with all of them.
Would you like to add some color? Are most of them, I assume, gold majors, or are there certain copper companies that would that see the potential with KSM?
One of the unique things about KSM is it is attracted to both the big base metal companies and the big gold companies. So we're not limiting just to the gold companies or the copper companies. We're engaged with all of them, and that helps create some competitive tension. You can rattle off who the biggest gold miners are on the planet, who the biggest copper miners are on the planet. You can also look at some of the public statements in terms of those companies that are looking for new copper projects and such. So pretty easy, I think, to identify who these companies that might be joint venture partners, who they are. I'm not allowed to say who they are because they're called confidentiality agreements for a reason.
So you're in a formal joint venture process. What does that mean? Does that mean that you're engaging with several companies or with one companies, and what's the deadline?
Several companies. It's being run by RBC Capital Markets, Royal Bank of Canada, who's really well versed in the mining sector. They have a very strong, deep-seated mining and banking team that are running the process for us. And I can say that there's a number of companies that we're engaged with in terms of discussing joint ventures.
Perfect. And the joint venture partner, I mean, they will complete the feasibility study, and after that, they have the option to go forward or not, right?
Correct. Yeah, because one thing you have to recognize is deals have to be win-win. Both sides have to come away from a transaction satisfied that they have a fair deal on it. One of the big risks you've always faced with a project the scale of KSM, it's a lot of capital up front. Our most recent estimate is $6.4 billion of initial capital US to build this mine. That's a big number even for the biggest mining companies to swallow. That's why the two-phased earn-in we think is more acceptable to them, and they're not committing to the $6 billion today. They have a period of time to do the work necessary to get to that decision point. And I think that's a big plus from their side of the table, in that, yeah, we may build this mine, we may not, but we have the timeline to get the work done to make that decision. And market environment can change within that 2-year period, and it's likely that it will. And my expectation is metal prices will be a lot higher then than they are today, which means the project should even be more robust than it sits today.
So you're hopeful that you will have a joint venture at least, in the first half of next year. But so what probability would you assign that you have a joint venture agreement signed within a year?
I am very, 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 very confident that we will have a joint venture partner within a year.
Where do you envision Seabridge Gold in 5 years? And also, where do you envision it in 10 years?
Well, in 5 years, I expect construction to be well underway at the project, putting in the large infrastructure that's going to be required to make this the biggest mine ever built in Canada, one of the biggest in the world. In 10 years, we're in production. So my goal is to stick around for that entire time. I'd like to not only be there when construction begins in a big way from our partner, but also I'd like to be there for the first gold pour. This was a big part of my life professionally. I've been working on this project now since the year 2000. It's come a long way. It's exceeded my wildest expectations. But until it becomes a producing mine, there's work to be done. And I'd like to stick around to the end of that.